Good morning. As we take a look at Carnival here, this is a stock that's been really making a nice cruise to the downside, if you will, following along that diagonal downtrend line. I've got the 30-period simple move, actually the 50-period simple moving average in here, which is a common measurement that institutional investors may use to define that downtrend. But what you notice, Oliver, is that we get into this kind of September time frame. There's a little bit of a pop to the upside as the travel stocks, the transportation stocks took a big move up, but then the anchor gets dropped right around this 42.5 mark as the price really breaks down on the earnings announcement. And now we see that anchor dragging down here right around 42. With that kind of negative momentum that we see in our lower screen on the MACD, that may be one of the reasons for the price downgrade here on this stock. But the fact that they haven't faced a lot of weather significant issues, but labor costs, fuel costs starting to increase, and that may mean that as long as this stock stays below this, what was support, now resistance, right around that 42 level, it may drag along there for a little while. It's got to break back up above there to regain that uptrend.
So, Ben, when we look at the nature of how this company has traded next to some of the travel and airline stocks, I think that's a good point to bring up because they're sort of tied to some of the same macro and also, intermarket competitive sort of price pressures that airlines have been dealing with. For CCL, obviously, as you point out on the chart, that's been a negative thing. HSBC downgraded the stock to a hold from a buy today. They cut the price target down to $43, which is still $3 above, but they were way off. They said it was worth $68. So clearly people have been caught on the wrong side of this trade. My question is, when it breaks that previous support, I mean, there's a pretty rough moment happening here now, right? Because the downside is what? Unsort of charted.
You're absolutely right. I think that's a good way to put it, is that we haven't seen those depths of this chart for quite some time on this stock. I mean, we're looking at a 9-month chart here, and we haven't seen anything near that. So if we do get a continuation of that downside, which may be suggested by that negative momentum, Oliver, we could see this continue to move lower. We'd have to go back to a much longer chart to
2016 actually.
Some of those historical levels of support.
Yeah, you got to go all the way back.
This has some room to move.
Yeah, pretty rough at $40. They haven't been there, since late, actually 2015 on a weekly chart. So it's come off big time. Hey, Ben, let's talk Align and Smile Direct. As Nicole mentioned, Smile Direct, a bunch of the analysts who are initiating coverage are saying to buy the recent IPO. Barclays, though, just lowered the competitor that makes Invisalign. ALGN is the ticker. They lowered their price target to 272 from 300, but they still say to buy it, obviously, because it trades at 183. Now, the catch for Align is this stock traded as high as $400 at its peak. So what are you looking at?
That's right. So I think as far as trend is concerned, this aligns nicely with that idea of an uptrend, right? So then we start to see this level of support coming into play right around that 280 mark, Oliver. And I think what's encroaching here, maybe the fact also, I don't know if you've been looking at your Hulu ads, but there are a lot of competitors in this direct consumer tooth alignment space that are jumping in, taking away perhaps that competitive moat that Align has. We get this big break to the downside on that earnings announcement. That big gap, almost as wide as the gap in my teeth here. We see that moving down into this sideways trend, really right between about that 172, 188 range. And really, this is just simply churning sideways along here, just kind of biding its time. Now, that being the case, in order for that any kind of an uptrend to resume, this has to break back up above that 188 mark to resume that trend. It's kind of at the top of the edge of that little sideways channel there. Now, little is a relative term. I mean, this is a almost 10-point wide channel here. But notice what's happening with the MACD down here, Oliver. That momentum gently falling off as we get now potentially over the horizon a couple of weeks into another earnings announcement that could be the catalyst that pops this higher, or they could give some guidance that may take this below. So the levels to watch here, 172 on the downside, 188 on the upside here on Align.
Here's what I'll say is that the shares, while they're trying to consolidate, you've got the big gap that happened on earnings last time, right? The shares had already been slipping from their high, and then they disappoint on the earnings front. Shares tank in a day from 280 roughly down to 200, like you've got on the chart there, Ben. So for those that think gaps get filled, an upside surprise could do that. But what I also see from the analyst front is with Smile Direct coming out and all the analysts now having to reassess their price targets for Align, they're cutting them from 300 to 272, and then Guggenheim cut theirs from 250 to 200. They're all still way bullish on the stock. So how could expectations here be that low for the company when all the analysts have, when the average target price rating is 273 right now, trades at 184?
Well, here's the thing that they don't give you is that time frame, right? This is the discussion that you and I have always had about gaps like this. That gap might get filled, but we don't know when that gap might get filled. And so it could be some time. And given those price targets, this is kind of an area here where the price of the stock didn't spend a lot of time. It gapped right through it. And so levels of resistance on the way up through here may not be that strong. It could, on some strong news in that earnings announcement, make a big pop to the upside, but that still remains to be seen. That could be a couple of quarters away. And so analysts are looking and investors looking now at kind of this sideways pattern and saying, well, it's just churning along sideways, just resting on that support.
Last time they reported earnings, they were doing about 30% revenue growth still. So obviously we're talking about a company with a high bar to live up to expectations. The company that is also growing that revenue. In 2016 they were doing 15, they were doing 11%. The year before that 10. So the growth story has been really big for Align, obviously, Ben. The last question is basically when you look at the momentum kind of slowing, similar situation into the last earnings, but the continuation, as much of the green you've got on the momentum chart there, seems like it's gone through kind of one of its most stable periods here throughout the past year.
Well, I think that's kind of the key takeaway here. Despite the fact that this is a 10-point roughly wide channel, it's pretty consistent. And you think about the stability, and so that's always a relative term. But those levels, and that's why those become kind of key technical toggle points, is this momentum is still positive. We're still seeing bullish momentum despite the fact that it's just channeling sideways. So that may be an indication that investors, and especially institutional investors, may be starting to nibble on that before they really push prices higher and start. That's why we see these kind of sideways trends coming as what we maybe refer to as a basing pattern.